why you should own gold. Nah, I'm just kidding. But maybe you're a bit new to investing, or maybe you're trying to broaden your horizon a bit more, trying to gather some information. Either way, I'm here to help you. For thousands of years, people have appreciated the value of gold. And actually, since the ancient empire of Egypt, it has been used as a medium of exchange. Gold is a precious metal, but why do they actually call gold a precious metal? Well, first of all, because it's extremely hard and expensive to find, but also because it doesn't rust or tarnishes, as it does not react with oxygen. It also conducts electricity very well, and it does not bond with other elements. Just like silver and platinum, the metal is really hard to find, and therefore it is unique. There are a lot of industrial uses for gold. You can think of jewelry, medicine, dentistry, computers, high-end technical equipment, even satellites or space exploration or something in that category. Just like Bitcoin, gold has a limited supply, and I think the inventor of Bitcoin, Satoshi Nakamoto, or whoever she or he may be, understood this monetary part very well. After the global financial crisis in 2007-2008, there was a need for sound monetary policy, where governments and central banks were not able to abuse fiat currency like they do today. Because you see, fiat currency on its own is a great medium of exchange, and it works pretty well when there is confidence. But when the government prints the fiat currency to oblivion, well, the confidence disappears. The reason why gold has been used as a medium of exchange for so long and as a store of value for so long is because it is rare, it has a limited supply, and its properties are really unique. There's no government who abuses it, and that's why gold is a true form of sound money. Now, from an economic perspective, gold is the best crisis hedge there is. This is, for example, what we saw during the Great Depression, and also after the global financial crisis in 2007-2008, when gold had a strong bull market until 2011. But of course, it's also what we have seen last year in 2020. Gold had a really nice rally up till the price of $2,100 per troy ounce. Now, often gold is referred to inflation and is seen as an inflation hedge. But is this also what we see in the data? And as a side note, when I'm going to talk about inflation here, I'm talking about the CPI numbers as reported by the government. So not about the real price increases we see in reality, which is something I've talked about in my previous video, but really the CPI numbers as measured by the government. Alright, so when we look at the following chart, we see some interesting stuff. First of all, let's look at 1970s. Because in the 1970s, we know inflation was really high, right? With Paul Volcker raising interest rates to 20%, etc., etc. Now, we see that in this time period, gold actually correlated really nicely with the CPI. After this, we went to the 80s and we see the CPI decreased pretty badly, but the gold actually shot up a lot, and therefore this is a bit of an opposite effect you would expect. Then we went to the 90s, and as I've mentioned in my previous video, we introduced these revisions, right? Introduced by the Boston Commission with substitution, quality adjustments, etc., etc. Then we actually see that inflation decreased for quite a long time. And of course, I would say it has a bit to do with that measure, with those measures. And then we get to the period of 1999 and 2000. And this is the period of the dot-com bubble. And what we see is that inflation was not that high in this period, but especially after the dot-com bubble burst, then we saw a big increase, a big rally in the price of gold. And again, correlation not that strong. Well, this bull market basically went on until the global financial crisis. Then the gold price had a bit of a hit, but afterwards recovered really quickly and made a high of $1,900 in 2011. But in general, this entire period from the 2000 onwards was a period where inflation was not really that high. But the gold price actually performed pretty well. Now, of course, this stopped after 2011. Then we had a bit of a consolidation. Of course, we know what happened last year in 2020. The gold price went up to $2,100. But what we see now is that the gold price has slowed down a bit, but inflation concerns are actually growing, right, with all this money printing and whatnot. So to me, often people say, is gold an inflation hedge? Well, I would agree, but I would also kind of disagree when you look at this chart. Because gold, yes, in the 1970s it performed really well when inflation was extremely high. But when inflation is a bit around 2%, maybe 4%, 5%, then we see gold does not really react that heavily. And also in times of crisis, so when a bubble has burst, like the 07-08 crisis or the dot-com bubble, then we also see gold rallying extremely hard. So to me, gold performs the best in times of crises and in periods where inflation is extremely high. Now, as of the moment I'm making this video, we see that the CPI is 6.2% year over year in the United States, which is, well, it's worrying people a lot. And we also see that the gold price at the moment is gaining some momentum. For the people who are using technical analysis, we actually see that gold on the daily chart broke the 200 days moving average. So we also see some confirmation here. I expect inflation to go much higher though, and therefore this, what I've talked about, I think gold performs really well in, well, such periods, and therefore I think gold will be an inflation hedge. And that's why you should definitely consider holding gold in your portfolio, even if it's only a small fraction. Alright, let's talk a bit about monetary and fiscal policy and economics, and the mess we are in today and all the risks I see everywhere. The first thing you should know is that you should not always listen to the mainstream media, because they will tell you that inflation is transitory, the economy is really strong, etc., etc. This is just not true. Inflation is not transitory, it's here to stay, and the economy is weak. The economy is weak because we're only consuming and we're not producing stuff. You see, everyone can print money and consume, but not everyone can produce. Of course, people will say, well, we have a service economy and therefore we don't have to produce all this stuff. Well, that's true. Since the pandemic, yeah, sure, we have seen a recovery. But why are there now labor shortages everywhere? The NFIB's September Small Business Economic Trends Report actually found that a record high of 51% of owners had unfilled positions. So sure, there are job openings, but nobody is willing to fill those jobs. And we actually see that a lot of small businesses have had to close down because they simply just can't find employees. And we actually also saw other businesses and even the very large businesses having to put on sign-on bonuses simply to attract these people who are not willing to work. So we don't produce goods and we have less people working. And linking this to monetary policy, this is why I think the Federal Reserve is trapped inside this box. The Federal Reserve has decided to do less quantitative easing, less QE. And QE is basically the buying of mortgage-backed securities, the buying of bonds to create liquidity. And how does the Federal Reserve create liquidity? Well, basically by printing money out of thin air. Of course, we know the main goal of the Federal Reserve, this is what they always say, it's to retain maximum employment, to achieve maximum employment. And inflation is actually their second concern. Now, when they see these problems in the labor force and with COVID making its comeback in the winter months, we see that the governments are going to impose restrictions again and maybe even more lockdowns. And this means that even more people will fall out of the labor force. So this will cause the Federal Reserve to say, whoa, 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 whoa. We're not going to do less quantitative easing, we're going to revert our course and even do more quantitative easing. But the only thing this anti-cyclical policy is going to cause is even more inflation. Like I've said earlier, inflation is already 6.2% year over year, and it will only get much worse from here on. Of course, I haven't even mentioned interest rates going up, right? Rate hikes, because that would completely collapse the economy instantly. That would do a lot more damage. And of course, there are more things we should worry about. Look at, for example, what's happening in Los Angeles, in the ports over there. We have these massive ships stocked with containers waiting to get unloaded, and sometimes they have to wait days, maybe even weeks, to simply just unload their stuff. And because these containers are so stocked to the max, sometimes even these containers just fall off the ship into the water. But what is the reasoning of all of this? It's because we have this massive trade deficits, we have massive overconsumption. We have such a weak economy that we are only importing stuff from, well, countries like China or Japan. And this is the reason why these prices of these containers have gone through the roof. And guess what? When we're sending them back empty. Why? Well, because we're not producing anything that other countries want. And I haven't even talked about the massive budget deficit. We actually now have an infrastructure bill introduced by and actually signed by Joe Biden of $1.2 trillion. But who is going to pay for this? It's you and me. So we have an inflation problem in the short term. And how does Joe Biden want to solve this? Well, by printing even more money for an infrastructure bill from which you will only see the consequences in the long term, maybe over 5 years, maybe over 10 years. Sure, but at the moment, in the short term, it's only going to create more inflation. Of course, there are many more worrying things I can discuss, but it basically all comes down to the same point. We have a weak economy, we do not have a strong economy, and there is going to be a lot of inflation, even more in the future. And in such a stagflationary environment, you should think of inflation hedges like gold, like commodities, like stocks, those kind of stuff. Now I want to end the video with some common criticism about gold. And I want to show that this video is not completely biased. First of all, gold does not generate cash. It does not pay dividend like a stock. Second, if you store it under your mattress in your house or somewhere else, and if it gets stolen, then you basically lose everything. But of course you can buy insurance, you can put it in your own vault, or you can say to a third party, well, here is my gold, can you store it for me? Another downside is that mining costs are increasing, right? We have this rising prices in commodities. Nevertheless, the profit margins at the moment are still really good. However, if you want to avoid these fundamental risks of these mining companies, you can, for example, buy gold royalties or royalties on other precious metals. A gold royalty is a contract which gives the owner the right to a percentage of the gold production or the gold revenue. This means you are only exposed to the contract, the cost of the contract, of course the gold the miners find, and of course the price of gold. But what I find really attractive is that you as an owner, you have nothing to do with the exploring costs, with the mining costs or other fundamental costs of these mining companies. And this would be the case if you owned mining companies. If you want to read a really simple and easy to read book about these gold royalties or gold in general, then I would recommend reading this book. It's called Why Gold, Why Now by E.B. Tucker. And I personally I really like the book. So I want to end the video here. I have showed you that due to its properties, its scarceness and its robustness against inflation and crises, that gold is a really excellent addition to your investment portfolio. And if it's not for you, then that is of course fine too. I hope you at least learned something today, because of course that is what it's all about. Let me know what you think about gold and other commodities in the comment section below. Feel free to like, comment or subscribe, and I will see you in the next video. Have a nice rest of your day.